Hi, everybody. Thanks for coming today. My name is Brent Johnson, and I have a firm called Santiago Capital here in San Francisco, which is the precious metal solution to my clients' overall portfolios. But I also manage those through a firm called Baker Avenue Asset Management that here is in San Francisco. I'm going to have to kind of speed through these fairly quickly, so we're not going to be able to spend a lot of time on the individual slides. But if you guys want the slides, you can email me. It's just brent@santiagocapital.com, and I'm happy to send you the presentation afterwards. Now, one of the things I'm going to talk to you about today is two of my favorite subjects, which is dollars and gold. I'm also going to touch on my dollar milkshake theory, which kind of explains where I think the markets are headed over the next couple of years. But a lot of times gold and the dollars are seen as competitors, if not mortal enemies. And I think that's true, but in my opinion, before this is all said and done, they're both going to rise together before one of them finally wins the battle. Now, I don't want to speak for anybody else here, but I think most people come to the gold world through the idea or the realization that the monetary system is completely out of control. All these bad debts have been created. They're never going to be able to be paid off, so the central banks are going to have to, print unlimited amounts of currency and inflate away the dollar. So just give me a show of hands if anybody's ever heard this argument before. Okay, so it probably won't surprise you that I agree with this to a certain extent, but probably not in the exact way that you think. Because while I definitely think the monetary system is going to change and the current format's going to end, I think it's going to be as the result of a strong dollar, not a weak dollar. Now here's a chart of the dollar going back to its all-time high in the mid-'80s. And you can see it's kind of on the upswing of a wedge that started about 10 years ago. And I think we are now in the very early stages of what I consider to be the perfect dollar storm. Now, in fact, I think you have every factor you need in place for the ultimate short squeeze. I mean, I honestly don't know if I could design a more perfect scenario for the dollar to go much higher. And I think the knock-on effects are going to shock everyone, even those of us who think it's going to happen. Because when I say the dollar is going to get stronger, I don't mean just a little bit. I mean it's going to go back to its all-time highs of the mid-'80s. Now, as a gold guy, why do I believe this? How come I don't believe the hyperinflation story? Well, anybody who's ever heard me speak before knows I'm not just going to throw up a bunch of charts and graphs. So I'm going to try to tell a little story here, and I'm going to use three of my favorite movies to do so. First of all, a movie called The Prestige, which is a movie about magic, betrayal, and revenge. Secondly, There Will Be Blood, a movie about a cutthroat businessman, and funnily enough, milkshakes. And finally, Highlander, which is sort of a sci-fi adventure movie where these immortals travel through time having epic sword battles along the way. So at the very beginning of The Prestige, Cutter, the magician, he's the magician's assistant, and he gives this kind of speech that kind of sets up the whole movie. And I'm just going to read you the opening scene because I think it's very apropos. He says, "Every great magic trick consists of three parts or acts. The first part is called the pledge. The magician takes something ordinary, a deck of cards, a bird, or a man. The second act is called the turn. The magician takes the ordinary something and makes it do something extraordinary. Now you're looking for the secret, but you won't find it. Because of course you're not really looking. You don't really want to know. You want to be fooled. But you wouldn't clap yet because making something disappear isn't enough. You have to bring it back. That's why every magic trick has the third act, the hardest part, the part we call the prestige." Now, just so we're clear, I'm going to show you that whether you believe in magic or not, it's a very effective tool. So I want everybody to look at a card up on the screen here. Focus on one card and one card only. Sear it into your brain, memorize it, because in 3, 2, 1, I'm going to make it disappear. Did that work? Yes. All right. Now, is it a trick or am I magic? That's the question, right? Well, these are the monetary authorities and the central bankers from 10 years ago. And I use that movie and I use these guys as an example because 10 years ago, these guys are amongst the greatest magicians and sleight of hand experts the world has ever seen. And after the global financial crisis, they started a magic trick of their own. In part one, or the pledge, was that they said that everything was okay and they had all the bad debts under control. So in part two, they actually did make the bad debts disappear. They hid them on the central bank balance sheets. And as you can see, the central bank balance sheets more than doubled or tripled over the last 10 years. Now, the initially most aggressive magician, the Federal Reserve, provided enough monetary stimulus to increase the monetary base by more than 400%. The idea was not only to make the bad debts disappear, but the ones that were still there, easier to pay off through inflation. And this is where a secondary trick by the non-US magicians attempted a trick of their own. Because many of them said since the dollar was going to get inflated away, let's go out and borrow a bunch of dollars. And when the dollar gets inflated away, we'll pay it off down the road when it's much cheaper to do so. And you can see debts by non-U.S. entities denominated in dollars has more than doubled in the last 10 years. It's well over 10 trillion at this point. Now keep this particular trick in mind because we're going to come back to it in a little bit. Now, many of us in this room also tried the same trick. We knew the central bankers were up to. We knew what they were going to do. We knew the dollar was going to get inflated away. So we sold our dollars and we bought gold. And we bet on the one asset that can't be inflated away or can't be destroyed in deflation, gold. And this comes to the movie Highlander, a story about immortals that can only be killed when one of their heads gets cut off. The Kurgan on the left is the biggest and the baddest and meanest of them all. He's basically just a bully. Think of him as the dollar. We got Connor McLeod on the right. Now he's our hero. He's more of a lover than a fighter. He's got soul. He wants to do good in the world. Think of him as gold. Now, most of us immediately jump to the final battle between the Kurgan and Connor McLeod. But the problem, and we know that's going to happen, but the problem is there's many battles along the way. And there's a lot more immortals that have to get killed before we get to Connor McLeod and the Kurgan. In many of these prior battles, the Kurgan, who is just running around the world cutting people's heads off. And the way it works is that when you kill another immortal, all their power flows to you. So by the time Connor McLeod and the Kurgan meet, the Kurgan is big and strong, is stronger than he's ever been. And this is what's going to happen to the dollar. This is what's happening to the dollar right now. Everyone in this room, or not everyone in this room, but a lot of people in the gold world are focused on the final showdown between dollars and gold. And that will happen. But in the meantime, the dollar's running around cutting off people's heads. And all that power and all the capital and all the global funds are flowing into the United States and into the dollar. And it's going to make it bigger and stronger than it's ever been. Okay, so other than a couple of clever movie references, why am I so sure this is going to happen? Isn't demand for the dollar subsiding? We hear that all the time. The real answer is no, it's not. Mainly because despite all the protestations to the contrary, demand for dollars from several different sources has never been higher. In other words, the demand is still there, supply is no longer growing, it's economics 101. Dollar goes higher. Now, one of these ways is just the debt service for the amount of dollar-based debt in the world. Now, I don't have time to go through the whole slide, but just to pay the interest on dollar-based debt in the world, you need over $1 trillion a year if all the dollar-based debts are at the same rate as the outstanding U.S. Treasury, which is ridiculous. It's probably double that. So you probably need $2 trillion a year just to pay the interest just on the dollar debt. Forget about the trade and everything else. That's just the interest. So we have a lot of demand from that place. Additionally, not only that, but despite all its flaws, the dollar is still the biggest and most dominant funding currency in the world. Almost everyone all over the world uses it to some extent or another. And because they've used it to borrow, they can't ditch it without first paying off the debt, or else they're going to lose their trading partner. Now, Treasury issuance is often cited as a reason for dollar weakness. They say the Treasury's taken out all this debt, that has to weaken the dollar. And over time, that is true. And in the long run, that will hurt the U.S. dollar. But in the short term, the Treasury is buying dollars from the market with their bonds. That is demand for dollars from a supply that is no longer being increased. Now, the next argument is that China and Russia and many other sovereign nations are sick and tired of the dollar and they'll no longer fund us. Again, there's some truth to this. Foreign entities are not buying our debt the same extent they were a decade ago. But their declining ownership trend has been known for a while, and our budget is now mostly financed by domestic entities anyway. And if the pension funds, insurance companies, and households were hungry to buy treasuries a year and a half ago at 1.5%, I think they'll be just as happy buying them at 3 or 4. And hey, look at banks. Now that we're off the zero bound, banks are actually competing for deposits. They're actually paying you interest on your savings accounts and on your CDs. This is and we can argue the reason why this is happening, but regardless of what they are, this is a byproduct of demand for dollars. Even the banks are competing for the dollars. Okay, so that explains demand. What about supply? Well, okay, now we're going to go back to the prestige. Now, many magic tricks take more than one person to perform, and it involves a great deal of coordination. And in this movie, an act of betrayal leads to chaos, and many of the tricks no longer work the way they did, and a couple people get killed along the way. And these two guys in the real world, these two magicians are no longer coordinating with the rest of the world, and the trick is going wrong. because each of them in their own way is making dollars disappear from the market at an increasingly alarming rate. Trump's Make America Great Again policies are starving the rest of the world of our most important export, U.S. dollars. With all his trade deficits, or his trade deficit arguments and the tariffs he's imposing, trade is slowing down. Dollars aren't flowing as much. And if dollars don't flow, they can become harder to come by, and it starves the rest of the world of the dollars they need to pay off their dollar loans. And this guy, not only is he not printing dollars anymore, he just keeps raising rates, making it even harder for those other countries to get the dollars that they so desperately need. Okay. So what else could lead to the dollar's continued use? Why can't people still leave? Well, part of the reason is there's no other system that allows it to happen. If we go to There Will Be Blood, this is a movie about a cutthroat oil man who used every trick and tool available to deny his competitors of the flow of oil. And just like there are pipes and tubes and hoses in the oil business, there's pipes, tubes, and hoses through which the money in the world flows in our system today. And it's through these existing pipes, tubes, and hoses that money gets from one side of town to the other, or from one side of the world to the other. There are channels through which this happens. And this is a diagram of the U.S. banking system. But since the U.S. is the world reserve currency, the entire world has to use this system. There is no other system. So they have to abide by it. Now, these tubes and pipes are controlled by the United States, specifically the Treasury, the Federal Reserve, and the large clearing banks. They also use it by the Office of Foreign Asset Control, the Committee on Foreign Investment, and the CHIPS and SWIFT systems. And just the way they can allow countries around the world to use this system, they can also kick them out. And that's what's happened to Russia and Iran over the last couple of years as we impose sanctions on them. And it's why their economies have struggled. And, you know, don't get me wrong. Over the years, there's been many potential replacements for the dollar, and there's been a lot of challengers that have been believed to be the heir apparent for the global reserve. But in reality, we're just not there. And don't get me wrong, de-dollarization is a thing. Countries are fed up with the U.S. being a bully and using the dollar as a weapon. There's no doubt about it. And they would very much like to de-dollarize. However, there's also then been these black markets. There's always been a way to subvert the system. But they're not efficient. If they were, you wouldn't see their currencies and their economies versus the United States looking like this. If these systems that they have are so clever and so good, how come they're not using it more? And how come their currencies are falling against the dollar? The fact is there's no other system that is set up. So let's pretend that all the countries in the world other than the United States can agree on what currency they're going to use. Then let's assume that they can all agree on who's going to manage it and who's going to enforce it. Fine. What system, or the system itself through which they would do this, does not exist. They would have to build it. And I believe that they are trying to build it, but it doesn't currently exist. So what about the argument that they're going to have to reintroduce QE? I mean, the rest of the world has been printing along with us for the last 10 years. And a lot of people think that we're going to have to go back to it. But the reality is most of our economic indicators now look better today than when we started the rate hikes 3 years ago. So even if the pressure was there to do it, there's really no reason to do it anytime soon. Especially because by raising interest rates, the Fed has actually removed another form of pressure that the other central banks are feeling, and that is to one day normalize policy. Not only that, but by swapping out the syringe that injects liquidity into the system, by raising interest rates, we've given ourselves a straw. And so we're sucking up all the other stimulus that the rest of the world is still injecting. And this is probably the most famous scene from There Will Be Blood. When Daniel Plainview explains to Eli, who has oil on his land, all he has to do is insert a straw from his side of the fence and he can drink all of Eli's oil. Or in other words, drink his milkshake.
To be correct, he's already done it.
Yeah, he's already done it. He's already drank his milkshake.
That's what he's telling you.
Exactly. So, and this is exactly what's happening now. All this stimulus is getting injected in Frankfurt and in Tokyo. But it's leaving there and it's coming here. So in other words, we're drinking the rest of the world's milkshake that they've been injecting. We're doing that via higher rates. Every time we raise rates, it makes it even more attractive to go to the U.S. So yeah, long story short, we're drinking the rest of the world's milkshake. Sorry, and the combination of the straw and the dollar Kurgan.
How much of their milkshake is left outside of our country?
How
long are we?
How far what?
In that movie,
Yeah.
he'd already sucked out every drop.
Well,
How much are we? How far?
we're maybe halfway there. Okay. All right. So sorry, figure out where I'm at here. Okay, so the point I'm trying to make is between this straw and the dollar Kurgan that we saw earlier, more and more capital is flowing to the dollar. Now, remember that pledge that they made back in 2008, as well as the side trick where the international entities issued dollar debt? Well, now it comes time for the prestige. But the problem is they're having trouble. Let's look at two of the biggest magicians from back in 2008, Turkey and Argentina. They're two of the top three. Now, Turkey, their lira is down 50% year to date because they can't pay it back and they can't get the dollars to do so. Their stock market's down 45% year to date. Argentina also did it. The peso's down almost 50% year to date. So is their stock market. This is the Kurgan running around and chopping people's heads off. And it isn't over. It's actually just getting started. This is dollar-based debt issued by international entities outside the United States. And you can see over the next 2 to 3 years, there's another $200 to $300 billion comes due. Now, 200 or 300 billion, it doesn't sound as much today after we're used to hearing about trillion-dollar deficits. But 200 or 300 billion for an emerging market country or an international country is a lot of money. Now, as one of my friends said, even if you think I'm wrong and the dollar's going to crash, then you have to figure out that means a bunch of money is going somewhere else. Where else is it going to go? So let's look at a couple options. Is it going to go to Europe? I mean, the euro is in constant crisis, and they have huge political problems. The Greek banking system is in trouble. The Italian banking system is in trouble. Merkel just lost power, and Mario's on his way out. In fact, I mean, the euro, it's really in perpetual crisis. Whether it has to do with immigration, their banking system, the sovereign debt issues, or even paying their own share of NATO. They just can't do it. So, I just don't see them as a viable alternative of dollar flows. But maybe it's going to go to EM currencies. Well, this is a list of all the EM currencies versus the dollar year to date. They're all down anywhere from 2% to 50%. How many people here want to sell their dollars and buy the Thai baht? I just don't see it happening, at least not in size. Or what about the international bond market? Well, there's still 8 to 10 trillion worth of negative yielding bonds. How many people want to go and give another foreign country who's in dollar debt your money so that not only can they not pay you a dividend, but they're going to charge you for the pleasure of giving them your money? Again, it just doesn't make sense. Or what about the international stock markets? Well, other than the United States, who's kind of flat for the year, everybody else is down double digits. I don't see a lot of capital fleeing the United States and rushing into buying EM. So that brings us back, of course, to the epic showdown of dollars and gold. And here's the thing. We're still not ready for the end of the movie. The dollar Kurgan still has a lot of heads to cut off along the way before we get to the ultimate showdown with gold. Now, people tell me all the time that gold can provide this simple and elegant de-dollarization solution. And I agree, of course it will. That's why I'm such a big proponent of gold. I don't think anybody should sell their gold. It will solve a lot of people's problems. And it's why I've been pounding the table on it for years. But regardless of this fact, until the rest of the world agrees, and until it's forced upon the governments who absolutely hate it, it doesn't matter. This is often cited as an example of why gold is going to explode. It's all the individual claims on 1 ounce of gold, and it's like over 200 times. This is on the COMEX in the United States. And I agree. This is part of the reason that gold will eventually go much higher. But what if I told you the same thing exists in the dollar world? There's less than $4 trillion of US dollar monetary base. Those are the only dollars that actually exist. Everything else is just digital. There's at least $70 trillion of US. There's only $4 trillion of a US monetary base. That's currency and reserves at the Fed. That's the only dollars that actually exist. Everything else is just digital. When the 70 trillion try to grab the 4, what happens to the 4? The price of the 4 is going to go through the roof. And what if we do the global monetary base versus the global claims? It's 350 to 1. And don't even get me started on derivatives because it blows that COMEX ratio way out of the water. So here's another thing, and I use this argument as well. This is, how many people have heard of Exeter's pyramid? It's great, it's fantastic, and what's at the bottom? Gold. But what do you have to go through to get there?
Paper money.
Dollars. So you cannot use this as your argument for owning gold and not also be bullish the dollar. It just doesn't work. Now, at the end of the day, there's a lot of battles that need to be fought before the final battle takes place. These smaller battles will see the dollar absorb all the strength of the other countries whose heads will get cut off, and it will reach heights that many people don't even think is possible. And of course, ultimately, there can be only one. And since there's only one asset that cannot be killed and is truly immortal, and one that cannot be inflated away, one that cannot be destroyed by a deflationary collapse. Gold will eventually return, as that previous pyramid showed. I just don't think we're there yet.